So we're spoiled. I think as consultants, we're spoiled because we just go into a corporate world where everything is established. People are there. You're interacting with people who are all motivated the same way that you are. They just, it's a bubble. And you don't realize it's a bubble until you step out of that bubble. And then you realize that it's not quite as easy.
There's a little bit of building the plane while it flies.
Kind of, no?
Well, I've never been a startup founder, so I can only say that out of example, having lived with so many startup founders. Joining me on the couch is Ranime El Skaff. Ranime is the founder and CEO of PropAI.
So if you are to think about investment thesis in general, no? If you think about it, there's of course the rental yield, the normal, you just buy and hold and just make secondary income. You have the fix and flip, and we're seeing more and more of this in Dubai. Then you can see how people move, or how hot fix and flip areas move. You start with...
I hear Meadows is one.
Meadows was one.
Was one, okay, sorry, because a lot of my friends did that.
Yes,
right? Yeah.
So the thing is that Meadows was one. Villas were affordable, they were bought, they're big, they're nice, they were refurbished, they were sold, moved to lakes, moved to springs, and now moving to Jumeirah Park, for example. But this kind of, there is a certain trend.
Yeah, for those who don't understand Dubai, guys, we're just talking about different areas in Dubai.
Yeah,
so, it's not every lake or every meadow. Right. Dubai actually is not as indigenous. It's got a very large transient population, and it's been a bit of a safe haven for real estate investments for as long as I can remember. I've been here 15 years. Very impressed. I think you guys are solving a real problem that exists in the market. Welcome to today's episode of Couchonomics with Arjun. Joining me on the couch is Ranime El Skaff. Ranime is the founder and CEO of PropAI. She was previously in consulting, and I guess for her misfortune. But we're not going to talk about her misfortune in consulting, but we want to talk about what PropAI and what the wider real estate sector is all about. So with that, I'll welcome Ranime to the couch. Ranime, thank you for coming in.
Thank you for having me. It's my first podcast. Very excited about it.
It is your first podcast, and you told me, and I said nothing to worry about it.
Trust me. By the end of the episode,
it's a walk in the park, and I'll make sure it is a walk in the park. But Ranime, thanks for coming in. Let's kind of dive straight in, because I think we have about 45 minutes. I want to cover a few things, but let's first start with the business itself, right? So, what is PropAI? Where did the inspiration come from? Because you also mentioned to me you're a first-time founder, right?
Indeed, yeah.
So talk to me about these various inspirations. Wanting to be an entrepreneur, wanting to get into the real estate sector, using technology.
Perfect. No, actually, both me and my co-founders are first-time founders. We started PropAI almost 2 years ago. And the reason why we started, as you had mentioned, I come from consulting, spent 7 years in consulting. 4 of them I was doing real estate and infrastructure. So I got involved into the real estate infrastructure ecosystem between Dubai and Saudi. And then I'm sure you are aware of how amazing are the things that are happening, how big the scale of everything that is happening there. I never thought I would get involved in planning a city. And it's kind of cool to see this happening. And then you get exposed to skills, to cool things, to different things actually that are pretty exciting in real estate. If I even go back to my childhood, my dad was also a very small-time developer, so I was exposed to real estate growing up. It was normal that on a Sunday he will take me to check out, the work site and then walk around. My first ever Excel model was actually just trying to help him and trying to understand how those different things are. I'd like to believe that I really have evolved from Excel modeling into what we are doing right now.
I still love Excel models, right?
No, for sure. Yeah. Everything actually starts with Excel until it moves into something a lot more. Anyway, so a couple of years back, Christian and I, my co-founder, and I started talking because I wanted to move from what I was doing into something new. And we were discussing real estate investment. The reality is I've always believed in real estate investment. My dad used to always say, money that goes into real estate investment is never, is not a penny that is lost. This is something that carries the value, etc. So when my husband and I wanted to start doing real estate investment, we were thinking about it globally. I'm Lebanese. Lebanon was not particularly a region or a country where I wanted to invest in. He's Argentinian. Let me not get started with that.
Yeah, well, the Argentinian economy is another basket case. But
Exactly. And at that point in time, we didn't really understand much about the Dubai real estate, residential real estate. It felt like it was going up. It was constantly going up. So we were worried and scared. And then I decided that, okay, let's go and deep dive into it. And then when I started working on it and like building Excel models and getting the data, etc., I realized it's a lot more complicated than it looks.
Okay.
So Christian and I were talking, we were like, okay, there seems to be a problem there. So we went and asked people around us, and it turned out that a lot of people who are in our shoes, who actually have the money to invest in real estate, but don't have the time to go and do it. We did some research, realized it takes 300 hours on average for people to actually do the research and close on a property.
Okay.
And I'm sure you don't have 300 hours.
No, and you are we specifically talking about retail investors right now?
Yes, we're talking about retail investors.
Okay. 300 hours.
300 hours of research.
Okay, 12. Yeah, okay. I can see how that adds up, right?
Yeah, and then like you already have a full-time job, so like putting in 300 hours, stretching it, it's a real pain point. You know, and people really wanted to do that. And the other problem was that in order to do that, there is a little bit of information asymmetry. The information currently sits with the brokers who represent the sellers or the sellers themselves. So it's not really fair to look at it from a buyer's perspective because you don't really. It feels like a leap of faith more than actually being sure and comfortable about doing that investment. So we started thinking about a solution to that. We asked around, a lot of the people in our position had the same problem. So we said, okay, let's start building it. The way it started is we had the vision to go global. We still have that vision. But we thought, then with time, when we started building that, we said, okay, we need to hyper-focus and prove that it works in one geography. We started with Dubai. So what PropAI in a nutshell does is it empowers buyers as they make one of the biggest investment decisions in their lives. We give them the tools, the transparency, the information, and the overall journey in order to be able to make a real estate investment.
Okay, but just break it down for me. So let's just assume it's me, right? And these days we get a call a day from a broker, right? Which says there's a new project launching from XYZ, great yields, which I'm sometimes confused how they've determined yields on new projects.
Thank you.
So on
or
and so
ROIs.
Forth.
For me, that really bothers me when they tell you great ROIs and it's just rental yield, which does not make sense.
So how does Arjun engage with PropAI to help make, let's just assume for the sake of discussion, a $1 million dirham investment in a 1-bedroom apartment in a new development somewhere in Dubai?
So you don't need to tell me whether you want a 1-bedroom or where you want to. So let me walk you through the process.
Please.
You go on the website. You're like, okay, I want to start my search. And it's not a marketplace. No. So what you go in, you have a very small survey for you to fill. And that survey is more about what is it that you want to get out of your investment. Okay. So there are different types of investment thesis. We can talk about it later, but are you looking for return on investment, or are you looking into secondary revenue? Are you looking, even if you want to move in, but after all, buying your house is also an investment. Do you care about it being fair market value, below fair market value, or do you care about it having a high capital appreciation? Okay. So all of those things are things you feed into our system. Then you give me your then you give me your budget. And then with the budget, you tell me whether you're going to take it as a mortgage or not, and how much of that will be mortgage, because all of those will go into the calculation. Sure. Then if you have any other preferences, you can add them. You don't have to, but you can. You can add areas, you can add number of bedrooms, ready or off plan, everything else that comes into play. Okay. Then what happens is we go and scan the entire market. So we look at every listing that exists out there, as well as we work with different agencies to get access to off-market properties. So you have built API connections into a number of platforms. Are these proprietary relationships? How does it work? So currently, we do have relationships with agencies, and those are proprietary. So we do touch into their XMLs. And then for the rest, it's basically we look at the open source data for the listings.
Okay.
And then we have
But there's no bias in your model. So you're not trying...
Zero.
So it's not because I'm a real estate broker, I work with PropAI, my properties go up.
Never.
Okay.
And I'll tell you why. Because I have all of those along with agents that on a weekly basis will just give us their listings. And then all of those go, and I don't know where it comes from. I don't know where is the source. It goes into my model and my algorithm. And then my algorithm puts a score for every single property that is there. And those scores depend on multiple factors. None of them are who you are or where I got the listing from.
Okay.
We, of course, also remove any kind of non-compliant listings or fake listings or listings that are there as a bait, and all of those things are removed also through our algorithm. We just put them on the side. So what we do with these, once we have those and then we score them, we also score them based on what is your preference, because different units will fit differently with different investment purposes. So for every single unit, I look at the rental yield, I look into capital appreciation, I look into fair market value, I look into the development itself, I look into the area itself, and I look into ROI, IRR, all of those based on your preferences, and I give it a score. And then what you would get is the top 7. So you look into the top 7, you open all of this, and then you kind of understand, why is this a good investment for you? Okay. I can tell you this is 10% below market value. This will give you a 7% rental yield. This will, and like when I look at ROI and IRR, I take into account all of the possible expenses, included vacancy costs, including property management, including taxes, insurance, all of these utilities, short-term, long-term. And where AI also comes to play a big role is in developing all of this scoring. For every single line, there is a machine learning model that actually can spit out the answer to that.
Okay.
So for example, fair market value. Fair market value right now, how people would look at it is they would look at, I don't know, the past 2 transactions and then be like, those 2 transactions, they kind of look the same, so I'm going to calculate it. When we calculate it, we have a machine learning that we call it the PropAI predictor. And what the PropAI predictor does is it takes the unit itself, and then we had already trained it on all of the transactions that have done, but already enriched with a lot more information. So for everyone, we look at 30 plus factors, not only real estate related factors, but macroeconomic related factors as well, because real estate prices are correlated. So we can understand what was the IBOR at that point in time, what was the oil prices at that point in time, what was, the CPI, what was the inflation, all of those are all included into that. So we first calculate a median fair market value, and then we add another machine learning model on top of it that would then look into calibrating it for view, for floor, for amenities, in order to get us a fair market value that is basically very specific to that unit. And then I can say, the listing price is 2.2, the fair market value is 2.3 million, then you are below fair market value. So for each one of those, we are building, some of them we have, some of them we're building.
So I get to those 7. Let's assume I like one of them. What happens next?
Very good question. I think, you go into the details, you simulate it if you want to play around.
So when you say you simulate, what can
simulate the financial, the financial investment, look at it, think about holding it for 5, for 10 years, all of these things. Let's say you like one. So there is a version today, and then there is a version in the future. The version today is you get in touch with one of our advisors. One of our advisors take this and walk with you through the entire journey, negotiate this on your behalf, gets in touch with whoever owns the unit, negotiate on your behalf. If you want to go view it, you can go view it. Basically do everything as your buyer broker. Currently, it's not yet digitized. We are currently working into digitizing this process, where if you don't want to talk to a human factor or to a human, you don't have to talk to a human. What we came to realize with time is, because of how big that investment is, people still want the human touch. Agreed. At least to start with. So We do have our advisors who are there. Our advisors are different because we use it as like AI augmented. So they do have all the tools that make it a lot easier for them to interact. If this unit does not exist or falls through or we cannot close it, then they have the back end that is also built in a way that would help them find a similar unit like this, propose it to you, send you the investment case. It all takes less than a minute to do that.
And this team is your own team, or is it outsourced to an agency?
This is our own team. So what we do is we do have two different companies. We have the GIFC company that is responsible for the software development, for the AI and RIP and everything. And then we have set up basically an onshore company that does the brokerage operations.
And you do position yourself as a buyer brokerage,
yes,
not as a seller brokerage
Never.
at all?
Because being a seller brokerage would go exactly against like what you just said.
Okay.
We are unbiased. The problem with current brokers on the market is that they are biased because they have their own listings, their own stock, and they want to get rid of it. And then the more expensive it is, the better it is for them. So they don't really represent the buyers, where we believe that the buyers needs to be represented because that's the only fair.
And your earning model, your economic model is who pays you?
The buyer.
The buyer pays you.
The buyer pays me.
So the seller does not, because the seller has usually a broker there.
Yes.
You're obviously arbitrating, so the buyer pays up. And are you willing to share how much typically?
So usually the buyer pays 2%.
2%.
Regardless, whether we are there or not. That is how the market currently stands. The buyer pays 2%. The seller is supposed to pay 2% as well.
Right.
But right now they're being represented by one person who gets paid from both sides, but is usually more like the higher it is, the better for them. Whereas this will not it's not incurring any extra charges or costs on the buyer. They have to pay it either way, but now we only represent them.
Okay, so just getting into the business model, right? So you are a B2C model then, right?
At the moment.
So you will start what? I can see wealth managers incorporating your product into a wider wealth management offering. I can see that happening very easily. I can see other things. It's very interesting. Let me ask you the second question. So I actually did use a buyer broker in the traditional sense. There was no AI because I'm going back.
Is it here in Dubai?
No, it wasn't actually. It was in Europe, right? And I was looking to buy a home in the countryside of a particular country I knew very little about, right? And so therefore, I was in the same frame of mind as saying, I don't trust the seller brokers because they'll sell me anything, right? And they know I'm a fool in any case because I have no clue.
That's fair. That is how it works.
What was quite interesting was when I got into the conversation with this person representing me as a buyer broker, was he told me the hardest thing he found was to convince the local population that there was value in a broker representing a buyer, right? Do you not see that challenge here at all? Or do you not see that challenge below a certain threshold of a property? And when it goes above a certain threshold, then the buyer is like, something, I need someone to represent me. Because I'm comparing this from an art perspective because I know a little bit about sort of art trading, but that's very fair.
Right. So for us, we had set a threshold.
Okay.
And we had set a threshold where we clearly communicate to people who are below 900K that we cannot represent them. And that's not because we don't want to, but that is because it is difficult for us to work with someone else on such a small transaction. So we do refer them to a partner of us that can help them on that side that actually do smaller transactions.
So it's 900K dirhams. Okay,
dirhams.
So $250,000.
Yeah, exactly.
Which is not tremendously high, but that pretty much means you cover 70-80% of the market, right? So in 2 years, how rapidly have you guys grown?
We started almost 2 years, and then it was building product.
Okay.
The product, one of the biggest learning for me is it just was more complicated than I thought it was going to be. So a couple of learnings for me was, one, more complicated. We are very lucky to have a lot of data in this country. But the deeper you go into the data, the more you realize sometimes it's not clean. Sometimes
that's what I was going to ask.
And then artificial intelligence, it's all about the quality of the data.
Yeah.
You need to put in, and I'm sorry for the garbage in, garbage out. So you need to have clean data. You need to have structured data. And then you need to be able to enrich it. And so building this entire ecosystem, building this cloud of stuff that just all constellation that all links to each other took us a significant amount of time. So we actually went live in the market in December.
Okay, so you're about 5 months in. 6 months in.
6 months in.
6 months
Six
in,
months in.
right? And obviously, you're getting good traction in the market.
Indeed.
What have been, so beyond just the data side of it, what have been the 2 or 3 biggest challenges as a startup founder here in establishing this business or getting it going?
No, that's a very good question, because I think I have some personal challenges for sure, and there are some challenges that come with the ecosystem and how things are here. And I was having this conversation yesterday. So in terms of let's start with the ecosystem.
Please.
We were also, I don't know whether we're lucky or unlucky that we were during the winter VC. So raising funds and fundraising was a little bit more challenging than I thought it was going to be.
A lot more challenging.
Thank you. I was like, maybe if I had started this 3 years ago, I would have been.
Yeah, you would have possibly got funding a lot more easily.
Yes, but so it is difficult, but we also, I think we were lucky in the terms where how we built the company and how we operated the company, given that we were born and raised in the VC winter, helped us a lot because we're very lean. Our burn rate is very low. And then we had built it in a way where basically we're very efficient and productive. And I think this is very clearly for us a product of the fact that we did not have a lot of funding and a lot of money to spend to start with. So we did focus on profit rather on growth very fast. And that was one of the challenges. The other challenge is, I think, and it's a little bit of both the region and myself, was talent. And talent's not like... So we're spoiled. I think as consultants, we're spoiled because we just go into a corporate world where everything is established. People are there. You're interacting with people who are all motivated the same way that you are. They just, it's a bubble. And you don't realize it's a bubble until you step out of that bubble. And then you realize that it's not quite as easy. We also had very specific kind of profiles that we needed to find. We're constantly working on it. We're constantly trying to recruit. Right now, we do it globally.
So is this talent on the development side, the product side, the AI side,
on both? So I'll tell you, the problem with operations and getting our advisors, for example, there. We needed to find a profile of people who understand PropTech or who want to be into PropTech, who want to be into tech, but also can sell real estate. And that's not a profile that you find very easily.
I don't think so.
So I literally sat with over 25 different agents and interviewed them. And every time I would just walk out and be like, no, and we kept changing the type of people that we're interviewing. We're like, okay, maybe they don't need to have a real estate background, but then it doesn't really work. So that by itself was a little bit of a challenge. But now we have 2 amazing advisors that we found. And then it is a lot about skills, but it's also a lot about motivation, about personality and the willingness to learn and do things differently, which is not very easy to find in real estate agents because they're usually very... they have been doing things.
Plus, they're in demand right now.
They're in demand.
The
They've been doing
good
this.
real estate agents are in demand, right? So
exactly.
And there's supply coming their way, left, right, and center.
100%.
There is, in my view, a little bit of frenzy in the market in terms of the investments. But we'll get to that in a minute. What you mentioned there were some personal challenges. Apologies.
The personal challenges was
just the learning curve that
it's definitely a learning curve. It's being able to switch that mindset of going from perfection to being able to just put a product out there for you to test it, because that's not how I'm used to do things. No, you push things until you take it to the client, where it's at 99%. Whereas I learned in startups, you cannot do this because there's always going to be something that's going to come up once it goes.
Yeah, there's a little bit of building the plane while it flies.
Kind of, no?
Well, I've never been a startup founder, so I can only say that out of example, having lived with so many startup founders. Lived as in lived in the sense I've experienced it because I've been angel investing for the last sort of 15 years myself. I'm angel invested in everything from fintech to fashion brands. But I do understand that there is no perfect answer on day one. Yeah. You've got to have good product market fit. So you cannot just launch something which is willy-nilly. But at the same time, I think you just have to constantly realize that when the rubber hits the road, right, the feedback that you're going to get is going to be quite tremendous and sometimes overwhelming, and you've got to respond to it. Yeah. Let's switch gears. Let's talk a little bit about PropTech, right? PropTech is bandied about a lot these days, right? It's about how property and technology are converging. So for the sake of the listeners here, right, be a bit of a consultant here. Just deconstruct PropTech for us, and what are the various sub-segments of PropTech that you see emerging? And are there ones that you believe are genuinely adding value to the ecosystem versus others which I personally feel are just, we are forcing technology down the throat of property, right? That's kind of my words. Maybe it's
I would actually like to know about what you think there, but let me. I'm not gonna ask you the question back. But let me.
It's my podcast. I ask the questions. No, but go on. Tell us a little bit about PropTech.
No, sure. Yeah. So as you said, PropTech is basically the intersection or the overlay of property and technology. And if I am to look at it as a consultant and I'm trying to think about the different pockets that sit there, there's the very clear one, which is Contech, construction technology, still sits under the big umbrella. And then here you can think of all the way from like 3D printing to drones to smart cities, if you want to put it under, or maybe it's a little bit different, smart cities. And then you have the amazing intersection of fintech and PropTech, and then that's also a very interesting sliver. And this is where I believe we fall, which is a little bit on the real estate investment, into thinking about it that way. Then there is a lot that goes with climate tech, which is also making
building sustainable buildings and green buildings.
Exactly. And then and I'm trying to think whether like blockchain, and they do sit with the.
I personally think smart contracts sit very well, right? And RERA has been one of the sort of leaders.
They're starting that with a sandbox.
Leaders on the topic in terms of putting, because I personally think, the mutability of the contracts, the ease, the transparency, so on and so forth, makes transactions so much easier, right?
Going a lot more liquid, a lot easier, a lot more global.
And let's not get into tokenization, fractionalization, and all that kind of stuff. That I get really excited about. I don't know if that is also deemed as PropTech. God knows.
That's definitely, but that's also the overlap of fintech and PropTech at that moment.
I totally understand, and that'd be pretty cool. Okay, so and you think PropTech as generally is kind of catching the imagination of people here?
I think all of a sudden, I don't want to say all of a sudden, but I really think that we do go through waves. I think fintech was all the rage in the past years. I think now we're starting to hear more and more PropTechs, and this is from my own personal experience. I haven't done any research, but it seems that a lot of the VCs that we're talking to has started focusing or thinking of PropTech as something that is exciting and interesting. And we have seen a lot of people or PropTech startups in the market here that are raising and doing very well at
so we're seeing a lot of action in terms of the whole mortgage space, right?
Yes, with Holo and Hush.
Yeah. So we're seeing a lot of that. How can we automate the mortgage space? How can we make it more efficient? We can call it PropTech, we can call it fintech. I don't really care, but to me, that's deep in the financial services world. Yeah. Right. Yeah. It's basically taking a financial services process. It's a loan. At the end of the day, a mortgage is, right. Yes, it is a conditional loan, and it comes with securitized assets to it. But I think it is. To me, PropTech is more is more around, I think, the work that you guys are possibly doing. It's also around making buildings more efficient, right? And I think you talked about construction there.
Yeah.
I think there's a huge angle around sustainability and how do we make more sustainable buildings, especially in our part of the world where consumption of air conditioning and so on and so forth is,
and then there's a lot of like IoT that is going into that, into making smart homes, into making all of those things. And then I think also there is something around the sales and, the sales process and digitizing that. To think about it, marketplaces are the original PropTechs. This is, they took something that was traditional and just put it on the web. Now there is a lot of, AR and VR that is going into it.
That's huge in terms of visualization, the process. And to me, it's no dissimilar to how cars were sold, right? I remember this discussion with someone about 15 years ago where someone said, people will never buy the car over the internet. And it was in an event where I think there was 20,000 people sitting in the audience, but I'm exaggerating the point. But this individual sat, and I kind of sat there, not being an expert on the sector, but I said, you never make sweeping statements like that, right?
Yeah.
And actually, funnily enough, I met that same gentleman 4 years ago, and I brought it up.
You're like, I remember that.
And I told him, and he said, something. It was one of the most foolish things I ever said publicly. Even if I believed it, I don't think I should have splurted it out of my mouth. But let me get to the bottom of this, right? See, real estate to me, and this will show you the lack of understanding that I have, has always been something which is portrayed as something which is very artistic. It is not scientific, it's art, right? Buying property is an art and selling property is an art, and so therefore the broker can spin all kinds of magic around you in terms of sell you a dream, and buying a property is not a property, it's buying a dream, it's buying a lifestyle, it's buying all of that kind of stuff, right?
That's a good broker when you get a good one.
It is
for himself, not for you.
It is. But tell me if I'm wrong. Isn't still 99% of real estate properties still bought with that notion?
100%.
Okay.
And that's what we're trying to change.
Right.
Actually, when we thought about it, we realized that like even in investment, like I understand if you're a homeowner, you want a dream. It's an emotional buy. This is something where this is a place where you want to raise your kids, etc. When it's an investment, it should not be that way. It should not be that. Like sometimes you need to understand that probably an apartment that does not look at the Burj is definitely cheaper, but could get
high rental yields relatively.
Exactly.
Yes, I agree.
And then like for you emotionally, you want the apartment overlooking the Burj.
Yeah.
But it does not mean that is the one that is the perfect.
Agreed. So this brings back the question to you. So how hyper segmented are you in terms of targeting your customers? Because the fact of the matter here is, let me segment this, oversimplify and say there are three segments, right? There's the home buyer for whom him or her, the dream is very important because he or she wants to raise their dogs or kids, whatever's fashionable these days. Okay. There's the other segment for whom this is purely a return on investment. It's a diversification of asset classes. It is either it's dividends through yield or capital gains through making something which is below fair market value. They would love someone like you and your business. Well, I'm sure everybody would love you, but I'm saying your business because it's simple, it's data-based, there's intelligence. But then there's this people who sit in the middle, right? Who want to behave like the people on the right, but find it very hard, right? And I think I'm kind of like that, right? I went through a process about 3 years ago buying an apartment in Dubai, which I'm never going to live in, right? I'm not going to use it. Even my visiting family wouldn't use it. I've only been there once in 3 years, which was the day they gave me the handover. I've never been back. But I can assure you that through that whole process of buying, every question I asked was more like as if I was going to move into that place. How do you deal with that customer? And unless... Or do you really don't need to, and you believe that there are so many people sitting in the last bucket that actually your business will do incredibly well with this third segment, and you really don't have to care about the first and second?
No, not really. The reality is right now where we stand is there are definitely people in that segment, but I don't think those people are the majority. At the moment, because it's such a big investment, it's actually difficult to be so disconnected from it, unless for you it's just, a very small thing from your entire wealth. So the majority of people, especially our target market, sit in the middle. And that is where we still marry the technology to brokers. This is where we say we augment our advisors with AI. And this is why we still believe that it's important to deal with humans. We do hope that with enough trust that is being built there, and with time, people are going to move more and more towards a less emotional, maybe more, I don't want to say it logical because it's not like, towards a more cold data-driven approach. I don't know if that's going to happen or how long that's going to take. Now, you will see a lot of the people who are on the I would say the more data-driven is when you look into off-plan. So if you are to think about investment thesis in general, no? If you think about it, there's of course the rental yield, the normal, you just buy and hold and just make secondary income. You have the fix and flip. And we're seeing more and more of this in Dubai. Then you can see how people move, or how hot fix and flip areas like move. You know, you start with,
I hear Meadows is one.
Meadows was one.
Was one. Okay, sorry, because a lot of my friends did that.
Yes.
Right, yeah.
So the thing is that Meadows was one. Villas were affordable. They were bought. They're big. They're nice. They were refurbished. They were sold. Moved to lakes, moved to springs, and now moving to Jumeirah Park, for example. But this kind of, there is a certain trend.
Yeah, for those who don't understand Dubai, guys, we're just talking about different areas in Dubai.
Yeah,
so, you know,
sorry.
It's not every lake or every meadow, right?
And then you see now moving into apartments, because also new apartments are smaller than big apartments, etc. There are hot buildings for fix and flip. And then there is the buy, and this is interesting in off-plan, no? Because off-plan automatically, or how it should be, is that off-plan is a little bit below how the market would value this, because that is how they're financing it. So you would buy it as an off-plan and then sell it pre-handover at a capital appreciation. And then we see that people in that market are, because there's nothing to see, because there's no there's a lot more trust. Mm-hmm. And here is where the developer plays a bigger role. There was like understanding that needs to be a trust for developer. And here we have our own models and data about assessing how different projects have performed
previously.
How different developers have performed. We look into how fast they sell out. We look into how liquid it is in the secondary market. We look into compliance in terms of date of delivery. We look into how much of Dubai has been developed by that developer. So all of those go into the data that allow us to suggest or off plan for the people who are looking for
that. Stay with me. I've got a question. Stay with me stay with the theme that I'm coming up with, right? So you mentioned buyer broker, yes. Right? Let's come on the seller side for an example, and tell me if I'm wrong here. So the way I understand with most brokerage firms, like most other brokerage firms, irrespective of real estate, you've pretty much got a 90-10 breakdown. So 10% of your brokers do incredibly well. 90% of them languish and struggle, and they tend to be below median, below average. Okay. My hypothesis is one of the biggest reasons why they underperform is because they are very poor at positioning the right property to the buyer, right? Who is also not exclusive to most brokers, right? Because this whole concept of exclusivity really doesn't exist in this sort of, hyper information world. Wouldn't your tool or your solution be very, very useful for large brokerage firms to get greater productivity out of the 90%, right? By actually helping them hyper target or hyper match a buyer or to a property, right? Fine, I have my 50 properties that I'm trying to sell. I get Arjun as a buyer, get to know Arjun a little bit better, so that I just don't go to Arjun randomly and offer him the property where I'm going to get the highest commission, right? But actually a property where I have the highest probability to sell.
Close. Yeah.
Is that demand not coming your way?
So you hit the nail on the head. It's that was one of the original byproducts of when we first started When we first started marketing, and you know, at the beginning you need to fine tune your marketing, etc. We realized that 40% of people that were signing up were brokers. They were signing up, looking at the tool, and then we were approached by a lot of brokers or brokerage firms that were asking us. And at the moment, they're like, you know, on the smaller side, because they understand the value of bringing this, whether we can work with them. And then we have started thinking about, we have built the product in a way where we can white label it once we decide about white labeling it. And to talk about the productivity, it's very interesting that you brought this to the market, to the discussion, because at the moment, and those are the numbers that I hear, big brokerages kind of estimate half a transaction per agent per month, which for me is very low.
I would imagine, and trust me, there will be 50% of their
that are
not selling even zero,
yeah.
right? Because if you take my 90-10, and my 90-10 is not based on any science, it's just purely based on the fact that I speak to enough brokers, because a number of my friends actually have created brokerages on the side, because when they started seeing the property sort of market growing a few years ago, they said, let's just create a brokerage. And they've all come back and said that, you know, there are 3 people who sell, the other 26 in the room are. And because the brokerage model here is basically, you know, it's basically you get paid when you hunt something or you kill something. You know, at the end of the day, it's an office cost, and so that nobody gets trained properly. You know, it's 100%. A little bit of an awful show, but let's not go into it. So you're seeing demand on that. Let me come back to you. So
no, but like on the productivity point, so it's half a transaction per month. Our targets were to start at 2 to 3 a month, and this is the target that our agents currently have, with the vision, with the augmentation, to get to 6 a month. And we have proven that it is feasible to do that.
But Ranime, let me challenge you on this, right? So do you really see this bullish story of Dubai's property or the UAE property or the GCC property carrying on for the next 10 years? Fine, with a bit of cyclicity, but do you really not think that we are building a bubble right now?
I think we have built a new baseline.
Okay.
Are we going to keep growing the way we're growing right now? I'm not sure, and I don't think so. Is real estate investment is about a trend at the level of city? I also don't think so, because right now I can tell you there are amazing investment opportunities that are coming up. Also, Dubai does not act as one entire area. I think when this will happen, or when the market's going to start to slow down, or when it's going to go down a little bit, it's not going to be uniform across all of the areas in Dubai. Some areas are going to get hit, some other areas are not going to get hit. For me, why I think we do have a set up a new baseline. I don't think, again, we're not going to keep growing at 10-20%, you know, capital appreciation or appreciation on a yearly basis. But I don't think that we're going to go back to pre-COVID times either.
Okay.
I think, and this does not have to do with the real estate market. It has to do with all the macroeconomic factors that we're seeing in the market. No, you see the demand that is growing. And before, in the past, it used to be from investors. The majority are coming from investors. However, we're growing in terms of population.
We are.
And this is real demand. It no longer is, you know, investor demand that is coming from the outside. And then I cannot predict big changes in the world like COVID or etc. But if we keep going in the same direction, and then this real demand keeps happening, then I don't see us going back to.
Do you see certain sustainability? You mentioned Saudis in your game plan.
Yes.
Right. How do you move from a city-state
to
a country where data might not be that easily available?
Yeah.
The dynamics change, buying behavior changes, arguably a much more domestic market emerges. Right. I'm sure there's investment interest there. Right.
There's investment in. So for me, Saudi is very exciting for multiple reasons. One, it's doing very well in terms of real estate. One, because mainly
is that
supply
just because
demand.
Supply is so
supply demand. I agree. But also now that they are opening to FDIs, and with a country that is doing so well, with a very solid plan for the future. what is happening. Of course, I'm sure you are very aware of how Saudi is performing. And we're very lucky to be in this region, to be honest. With all the craziness that is happening around the world, I think our region is very solid at the moment and has proven to be pretty solid. With them opening for FDIs. And this is where you said you saw them as challenges. I saw them as opportunities. When you start going into FDIs, you need people who can speak the language of investors, of international investors. So being the first person or the first company that is able to provide that service for someone who is not local, who does not know, every corner of the city, and who does not know that, oh, my cousin is building a villa, is going to be very helpful, and is going to be hopefully something that is a great opportunity for us. In terms of data, I think Saudi has been doing a lot in terms of that. They still haven't gone super public about it, but we have been in conversation with the real estate registry, with the real estate government authority. They are also super happy with having PropTechs moving into they're very supportive. They're building the ecosystem. And the good thing about it is they're building their data from scratch. Or they're digitizing their data from scratch. Digitizing data from scratch would allow you to get cleaner data. So it might be less, or it might be more straightforward to use that data than use data that has been collected for 15 years.
I agree. Don't the data points change a little bit too? Or do the data points remain the same? Does it make a difference? This is just a very dumb question from me. Is it different when you start looking at non-city states? Okay, fine, maybe Riyadh and Jeddah are very similar to Dubai.
Yeah.
And maybe you just say that, something, that's where 30% of the population of the country is, so I'm going to only focus. But new dynamics don't walk in typically when you move?
We will definitely need to look into this, but for us our strategy is to go into cities. So you go to Dubai, then you move to Riyadh, then you move to Jeddah, and also that is how they are looking at data. For now, for example, their data covers, like, they are digitizing, but they start with the big cities. So if you want to enter through the big cities anyway.
And how soon are you going into Saudi? Is that something?
We started conversations.
Okay.
So getting into a new city, especially a new ecosystem, and I've been going to Saudi for 12 years, but of course it has its singularities. It has, it's a different culture, I don't know. I wouldn't say different culture, but they deal with things differently.
It's a very different place, right?
It's a different place.
You've got a much bigger indigenous population.
100%.
Right?
100%.
And it's 35 million people, right?
Yeah.
Dubai actually is not as indigenous. It's got a very large transient population, and it's been a bit of a safe haven for real estate investments for as long as I can remember. I've been here 14, 15 years, right? And been through a few cycles. I'm cognizant of time. So what are the next 3 or 4 big things for PropAI? Whatever you're comfortable sharing. No,
I'd love to share for sure. So for PropAI, what we're thinking about is we want to go back, of course. So as you said, we want to go back to our global mandate. So now that we have established that this works in Dubai.
Have you gone through any fundraising already, or are you still bootstrapping?
No, so we did angels.
Okay.
We raised an angel round, and now we're going into seed. So this So this is one of the big things. We're starting fundraising for seed.
Okay.
Just started conversations, and so this is one, fundraising. Second is looking into other cities to expand to. Saudi is on the radar. Is this the first move or not? Still discussing that. The third one is product. Of course, we're always expanding on.
And how much of the product team is based here in Dubai with you, or is your product being developed somewhere else?
So we have a combination. We do have 2 people. So my co-founder, who basically does product, is of course here, and a product manager. And we have our AI team that sits between Turkey and Egypt. Okay. And we have our tech product team that sits in Sri Lanka.
Oh wow! Okay, so you're generally global.
Yeah, we're pretty global. Well, as you said, we grew up in VC winter, so we needed to find the most cost efficient way of doing things. You found an optimism.
Sorry, I interrupted.
No.
So there's product,
and then the third thing was product. We are always we're very lean. We release on a weekly basis actually. So every week we have a new release, and then we fix some bugs, or we or we add new features. But then there are big things that we're thinking about. B2B can be another option and another thing that we're talking about. In terms of product, for sure. So we're very excited about product. This is the core of what we do. And then there are a lot of features that are going to come live. One is digitizing the entire process from A to Z. The other ones are adding more and more machine learning models. One of them, for example, that I am very excited about is forecasting. So we have started working on the machine learning forecasting to understand how the cyclicality, how the market is going to move in the future. We look into eventful estimates, into, moving an airport from one place to the other. How would that impact prices? All of these things. And then this is work in progress that is coming.
So you're going to introduce certain simulations. Is there any intention in the near term to start embedding financial products into it?
Because
I'm just thinking around, how do you move beyond the 2%?
Yes. So if we look at the 2% into our revenue model, you have right now the 2%, then we have the entire data system, and then the data monetization that you can do through B2B, etc. The third one is payments. And this is where, if you want to call it tokenization or smart contracts or all of those things, but also if we want to go into stable coins, into making sure that the payments can happen globally, easily, faster. This is in our horizon. Third horizon, because I think this will become more and more valuable as you go more into global.
So the intention is not to bring the entire buying process in it. I was thinking more simply in terms of why not just bring in mortgages into your product, because that's another area where, to be honest with you, there is so much lack of transparency.
Right now we work, so we do cover A to Z, but through partnerships.
But are they integrated?
We are integrate. So this is part of the integration, but we will not be offering it ourselves. So we work with Huspi and with Lendu and with other providers on mortgages.
Okay.
We are looking into integrating that so that it becomes seamless on our website. We do work with property. So I love the PropTech system, ecosystem here, because we're still small. So we all know each other and we kind of all work together. We work with property management, rent now, pay later, people who can take over the investment once our seller invest with. And then we're looking into also bringing those more into so we're looking into having an A to Z process. This includes digitizing the rest of it, but then pre-buying, post-buying, to integrate the different players into the ecosystem.
Great. Ranime, I want to thank you for coming in.
Wow, those were a quick and fast 45 minutes, I have to say. Yeah. They went by super fast. Yeah, I didn't realize I've been talking for 45 minutes.
I think we went a bit longer than 45 minutes, but that's not the problem. But no, very impressed. I think you guys are solving a real problem that exists in the market, at least for people who are looking to make intelligent investments, right? And who are not just dreamers.
The reality when we think about it is we feel that real estate investment right now is like buying stocks in the 80s.
Okay. You went around in the 80s, so how have you
but we watch these movies where people are like calling their brokers and asking about this and that, and like being super uninformed and have no idea, opening a magazine or a newspaper and look, and this is how it's happening right now. And we want to move it, and we think that it deserves to be a lot more. It needs to be brought into the 21st century.
I totally agree with you. It seems very impressive. I will give your tool a shot this weekend. I think it's interesting. Not that I'm in the market to buy anything, but let me.
I'll ask my team not to badger you a lot.
Yeah. Well, I'll go in with a fictitious name then, right? I'll go in with a fictitious name so that they can't find me. But no, best of luck. And I guess a shout out. I guess if the episode comes in at a time when you're starting your seed round, you can use this as a part of your pitch deck.
Yeah, sure.
You could put a web
I'll just add the
just
link.
put a web link and say, if you want 45 minutes on what Arjun asked, not that it makes a difference what Arjun asked, but you should. But, best of luck.
Thank you very much
and
for
I'm
having
sure
me.
our paths will cross again.
I'm sure.
And, who knows, we'll have you back in the show in a year or 2 years' time when you're in Saudi and growing and all big.
It was a pleasure. Thank you very much.
So ladies and gentlemen, that was Ranime Skaff, who is the founder and CEO of PropAI. You heard everything about real estate and how she's going to drag it from the 80s to the 21st century. Not do I remember anything about what the 80s looked like, either for stock markets or real estate. But with that, goodbye, and I'll see you guys next week.